following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Welcome back, everybody. Thanks for staying with us. This is Michael Burke filling in for Tom Snyder today on our Traders Workshop segment. Our very special guest today is Mike Arnold, co-founder of Path Trading Partners. Mike's a frequent guest with Tom, always generous, sharing his considerable, outstanding technical analysis skills and experience. Mike, thanks for joining us.
Well, thank you again for having me.
So the audience, you know, we have a lot of new people in the audience, and just to level set, can you tell us a little bit about yourself and how you spend your trading day?
Well, I've been doing this since 92. I was originally an options market maker down on the CBOE and then the CBOT when that was still independent, and then over in Switzerland, and then eventually went off the floor and now just trade and do all my analysis from my home. Recently moved that back out to Arizona from Chicago, and I've been working with technical analysis since really 92. Used to have to do it in my head from the pits, and now do it from the charts.
Yeah, so that must have been a wild time on the CBOE floor. What were you were trading index options or stock options?
Stock, Blockbuster, Coca-Cola, when Blockbuster was still a thing. I mean, that was the early 90s, so Blockbuster was definitely still a thing then.
Yeah, I was never on the floor. I never traded on the floors. I'm not an industry guy, but I've been on those floors when they were still active, and it was fun. It was wild. The technology was so primitive in those days compared to what we have now.
Yeah, I mean, I used to go back up to the office at the end of the day and still do a lot of hand charting. We had computers and everything, but I used to do a lot of hand charting, and you didn't have all the devices even back then that were all the handheld devices that have since I was down there, it came into fruition. So you were monitoring. I mean, you had your sheets and everything to read off of, but you were doing all your cross-referencing and quick calculations with your deltas and gammas and everything. And okay, where's my Vegas lie? And it was my background's engineering, electrical engineering, and one of the reasons I got that role is to be down there because you could do a lot of math and thinking really quick in your head. Whereas now I've become much more, shall I say, stupider, because all the information is just staring me in the screen, so I don't have to calculate anything. It's all done for me.
That's funny. That is funny. So let's get into it. So, we were looking really good at the beginning of July, that first week, 4th of July, and then it all kind of fell apart in the rest of July. What was that about? Is that a top that's going to be in for a while?
It's looking like it could be in for a while. Again, I've talked about, I've been on a number of different things, and I do a daily live stream. But what will tell me we at least have the ability to return to the top is in the September S&P futures. At this point, we need to close about 54.95 on a daily basis. Other than that, anything right now is just still a bounce play until we get to move into more of a sustained rally. July was so interesting because I was on Ninja in July, and again, everybody was talking about, well, the last 10 years, every July was up the average of 5%, so it's a no-brainer, everything. And I said, I'm not buying it, because when you cherry pick a specific, well, it's been up 100% for this specific time frame, you're cherry picking data. B, it was just everybody was coming across as bullish, and we were running out of momentum and had a lot of topping areas. Now, at least we've pulled back and corrected on the pure S&P September contract. We've retested the 200 SMA, which has not been done for quite some time since we broke above it in last November, which started the beginning of last November, which was massive rally. Does that mean the correction is just magically over? Not necessarily. In my viewpoint, it's still on any bounce plays. I have to dial in my targets and be more aggressive taking off profits, and then be prepared for potential rollovers until I can get the probability shift, which would be that close above that 54.95. If you just want to remember number, just remember 5,500 at this point. If you see a daily S&P close, the technical analysis I do, the probabilities have shifted that we should then retest potentially about the 5650 level to the to the most recent highs that were established in the middle of July. Without that close above that 5600 level, or 54, or I mean the 5500 level, 54.95 to be exact, I will still be focusing on rollover plays. In the last couple days, we haven't even been able to sustain a bounce going into the close. We've sustained a lot of selling pressure even in that. So more recently, I'm watching specifically yesterday's high, Wednesday's high in both the S&P and Nasdaq, because we have to get through that to even get a sustained rally on, especially with this PPI and CPI numbers next week.
So we can see your chart, Mike. Can you give us just a kind of a quick, 50,000 level view of what you're looking at here, and what are the key things that we should be focusing on?
Sure. In terms of the moving average lines, I use the 200 simple, tests out best versus the exponential, but all the other ones, the 8 EMA is this orange or yellowish line. That's a key area I watch for market reactions at or near. You see, even yesterday we ran up and then reacted back down. Once we get through that level, the next one is the blue line, which is the 21 EMA, so another exponential moving average. And the final one is the 50 EMA, which tests out better than a simple moving average for key support resistance. So between the orange and the blue lines, I watch for, since they are turned down, I watch for resistance areas, key resistance areas, and I'll watch for rollovers. Other things I watch in the chart, I use harmonics, which are 12.5% increments. So instead of Fibonacci levels, I use 12.5% increments, like a musical scale. The major resistance area on this bounce would be between the 50% retracement from the highs in July and the lows for Monday, which comes in about 54.20. And then the other level I cited, that 54.95 area, is the 62.5 harmonic. The 62.5 harmonic is a very key harmonic, because when you close above it on a daily basis or on a retracement close below it, it does shift the probabilities. And when the probabilities shift for the upside, then I'd be targeting the 87.5 harmonic. That's roughly the key things I use. I do some cycle analysis. I do use short-term RSIs for overbought and oversold, but I do not need them on my charts at all time.
So is that 1250 level usually a pretty good support level, especially in a spike down like this? You were talking about the 87 level. So I'm just kind of conflating the idea that if 87 is a strong level on the resistance side, that 1250 could be a strong support level.
It can turn that way, and you'll see we didn't have that 12.5 level until we formed Mondays, but it was a pretty decent support level yesterday and so far today. So it's something, that's why it's on the chart, because when I come up with key areas, so I look at clusters also. So we had that 12.5%, which is 51.95. We also have the prior retracement harmonics from the lows in April to the highs. And if you see there, we had an 87.5 prior harmonic, which was very key support, which turned into the spike low area for Monday. So we had a cluster there. And then coming up, the next key cluster, we also had that 12.5 harmonic and the 75% harmonic from before, also right around the highs from the end of April, which on a closing basis has remained very key support. So I have a support zone down here, and then we can do the same thing on any rally. If you look, we have a 37.5% harmonic, which corresponds now with roughly the high on Monday. But Tuesday's rally fell just short of that. Wednesday's rally just moved into it, and then we had the selling. And so far Thursday, we're rallying back. We don't know how this is going to close yet, but we're closing in on that very key harmonic resistance area that's now been tested 3 times. So very key resistance. If we do break that, that's where my next target will be the 50% harmonic, which corresponds to a very strong prior support level just above that. And we're in the middle of what I call the rotation zone between the yellow and blue lines, whereas I will be watching for potential rotations lower as we approach that 5420 area.
So in your mind, that 37.5 harmonic, if we can get there in the next, either today or tomorrow, that's kind of an inflection point. Where we go from there is anybody's guess. If we can break above that, that's bullish. But if it doesn't hold again, that could signal, again, maybe a test of the 12.5 again.
Correct. That's one of the reasons, there's one thing to watch intraday. Again, we could still rally up there today, potentially. I want to see the most important data point is still the closing data point. The last 2 days, we've rallied up there and not been able to close up there. So we're rallying up there to this area again, but I need to see a follow-through close, roughly around this 53.50 level, which would then, I'll be watching for a continued higher push if we can get that close into the beginning of next week. And then we'll see with some key economic numbers coming out. And then if we do continue to push higher and follow through with above that 54.95 on a closing basis, because any day can still spike above there, but once we close above there, then I will shift to, okay, the probabilities, not the guarantees, the probabilities say we should then retest some highs from the beginning to mid-July. But if we can't sustain that, then I'm focused more so on rollover plays. And if we can't even get a close above that 53.50 area, then I'm really focused on, hey, we could get some key rollover plays going into next week.
Yeah, I think that's a very probable scenario. I am a bit concerned about the fact that we've got these 2 sell-offs in the last 2 afternoons. A lot of times that kind of, you never know what's driving that, but sometimes those patterns continue. There's some group, some trading activity going on that deliberately or just through the process drives the market down. So those last two days, those big sellers wicks concern me. Hopefully we don't see that today and we break out of that pattern.
And remember, a lot of institutionals reposition themselves and sell things into the closing time frame. So when I can't see something sustain into the close specifically, or at least get some buying pressure into the close, it's generally done by larger institutions rebalancing. And so you're seeing, okay, any rallies are still being sold on some of the bigger players in my mind. So that's why it's very key to at least see some continued buying pressure into the close with then follow through the next day, which we have not seen yet.
Right. And I think that's something we're looking for.
Yeah, and what's interesting, if I switch to Nasdaq and we look at yesterday, so I was really focused on the Nasdaq. Nasdaq yesterday also bounced up towards the rotation zone, collapsed back down, and Nasdaq actually closed lower than Monday's close. So the selling pressure in the afternoon actually was able to close it lower than even Monday. So this is one thing when I see that, that was some substantial weakness in the Nasdaq. So Nasdaq still has a fair amount of heavy lifting, even though it was able to spike up and close the gap from Friday. Well, yesterday it could not sustain that. So the key level on the Nasdaq is about this 18,600 area. It's got to get a close through that, and then even if it can do that, there's massive overhang of resistance. And then it's still, this is why on any rollover plays, I'll be more focused on the NASDAQ heading down first, because the key level on the NASDAQ, in order for it to sustain a more bullish move, is back above 19,600 on a closing basis. So there is a lot of room, even on rallies in the NASDAQ, for key rollover plays before we put in a firmer base.
Yeah, I mean, yesterday's close was very depressing, watching it close below Monday. And I was certainly thinking that we were going to see follow through today. So that turnaround was a bit of a surprise. But the good news here is that we're still above those lows in April, which I think is somewhat telling. I'm sure that that there are probably some resting buyers somewhere around those April lows. So that could be another support level if things get worse here.
Yeah, and we've spiked down towards those lows on Monday. Again, this is the September futures. But if we break those, this is where the key areas, and this is where I'll do harmonic projections in the 12.5 and 25%. If we do break through the lows, the rough lows from April, which corresponds to Monday's low area, this is where it could get interesting, because we could see a retest of the lows from the beginning of the year, right around the 5th of January. And the projection down there is roughly about 16, what is that? 16.9. 16.9 would be a very key harmonic projection area. So that's where I'm watching. If these lows for some reason do not hold next week, then Nasdaq could easily retest the lows from that were established in the year.
And that's getting close to a 20% retracement from the high.
Mm-hmm. Exactly. Now, there is also, just if you look back, even on a bounce play, remember, things don't have to go straight up or straight down. They can sit in a consolidation. So there is very strong support by those April's lows, but we're even on this continued bounce. You see the major resistance shelf from most of March and April that finally we broke above it in the end of May, retested in the beginning of June, and then we were off to the races through mid-July. So the prior resistance becoming confirmed and retested support has now turned in. It was support at the end of July, but now this is very key resistance, very, very major resistance. So we could see the NASDAQ really struggling to get through this 18.9 level to 19, 18.9 to 19. It's going to have to do some heavy lifting to sustainably move through that area.
Yeah, what's interesting to me is that would be like again another inflection point. We could easily see, right, a retracement to that level. So let's say we're in an intermediate downturn here. A retracement to that level would be quite natural in a down market, and that will become an inflection point. Do we continue down from that, or can we break through there and maybe recover a little bit?
Yeah, and even if we did manage, even the 50% retracement from the sell-off is still 19,167, which takes us into a key rollover potential area. Whereas I know a lot of people might be celebrating just on the close back above this 18.9 level. I will be very cautious until we follow through and get above the 62.5, though, because we're back into another major rollover zone. That's why, yes, there will be on a continued bounces, there can be long trades, but I have to be very conservative with my targets and say, okay, meaning I cannot just magically put out a target. Hey, we're going back to, like this 20,000 mark. My targets have to be a lot closer than that. And I have to manage stops tighter on any continued follow through, because we could get that selling pressure coming in at any time and do some quick rollover plays.
Yeah, there's a lot of stressors in the market, news, economic things that you can't predict. And if the market is already in that weaker tendency, sometimes that gets amplified.
Yeah, and you have a lot of key things that were leading the markets higher in terms of stocks just have broken key support, have some short-term bearish patterns in play. And so when you get some of the bigger stocks, the Magnificent Seven, everything in starting to do more rollover plays, again, it's going to weight down on the Nasdaq and the S&P, and you can get sudden and quick moves back down lower. So I am very cautious to the upside until the market now has to prove itself more so than being given the benefit of the doubt. And especially from the April lows through the July highs, it was given the benefit of the doubt. And even from beginning of November lows, it's been okay. We put in some key bottoming patterns. We have some sustainable rallies in place. So it was easier to just go ahead and buy the dips. And now it's getting more into potentially sell the rips.
Yeah, that makes sense. I normally don't use the 200 moving average, but I realized how critical that is actually now on this market. That we've hit 3 closes below it. That's even more bearish than I thought when I was looking at this chart at the close yesterday. But fortunately, we're back above it here. But yeah, that's a pretty critical level for all of these markets. I didn't realize we were down at that 200.
Yeah, and it's not like the end all and be all, but what I watch for is how long things take to reconnect. So again, we didn't break above this in the Nasdaq till the 3rd of November last year, and now we finally reconnected. We didn't even reconnect with it in April, so we're finally at least resetting it, which gives me sort of a reset point. Now we have to see if we can sustain everything. And people say, oh, the 200 to 200, it's an area to watch for reactions around. So now we've seen the reactions building. Way back in November, we tested it. In October, we bounced to it, sold off below it, and then finally were able to sustain something above it again. Now we're back at this critical junction. So are we going to be able to sustain something, or are we still on any bounce? Is this just an area of inflection where we can't sustain it? And this is why the market's at a major deciding point. Even if we get a close above it, it's not trading it day to day, moment to moment. Can it follow through with a continued more than a 2 to 3 day bounce?
Yeah, that's an excellent point. Before we started, I asked you a little bit about VIX. So VIX is at 25. That's a pretty significant number. That spike on Monday to 56 on the open was incredible. That usually puts in the low, right? And generally speaking, you see a spike like that puts in the low. But I'm not so sure this time. What do you think the VIX is telling us?
The VIX, from my aspect, we saw a massive overreaction just because there's been so much volatility selling. The VIX ran up quicker, and then even intraday on Monday collapsed pretty rapidly.
It did.
Now, that's why I'm not necessarily buying that the low is in. It's getting a little complacent a little quickly already. However, if we start 25 is interesting to me, but if we start dropping the VIX below 20, I will start watching, and we close above those key levels I've talked about, I will start watching for a more sustained short-term rally. If we can't get back below 20 on a closing basis on the VIX, I'm still in cautious mode that it's rollover zone.
Historically, we sometimes see a second peak in VIX after this first one, and that's where the low gets put into.
Yep.
So even though the VIX may not reach the level of it did on Monday, we could still see a higher VIX that puts in the low. So once in a while, you do see that double tap in VIX before the market puts in the low.
Yeah, and especially if we break below Monday's lows or retest or break below. And when I say retest, like really retest it, not get close, but then, and the VIX does not spike above Monday's highs, then you essentially have a divergence. You've had the market retesting those key levels. The VIX did not react as strongly. And that, you're exactly right. Many times that gives the green light go ahead that, okay, we've retested those key areas. People weren't as scared at those key times. The key areas held, or even if they slightly break and then it snaps back into the close, and the VIX then starts pulling in again and dropping rapidly, it's like, all right, we've retested. There's not as much fear this time. People weren't panicking on the retest. And now we've sort of flushed out that to make sure the overall bearish sentiment is out and we can put in a more sustained bottom, which we have not, to your point, we have not seen yet.
Yeah, I like that, the idea of equating that to divergence. I didn't think of it that way, but that's absolutely true. That's absolutely true. Mike, we are out of time. This went by way too fast. It was fun having this conversation. And of course, we'll have you back again real soon. Probably Tom will be hosting on that next time, but thanks so much for being with us. This was great.
Thank you. And thank you for those great questions. And again, bringing stuff up that I hadn't even thought about in the short term. So thank you for doing that.
All right.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.